Good afternoon, everyone. BC Richfield here, coming to you live from London. It has just gone a couple of minutes past midday, making it just gone 1100 UTC. Big shout out to everybody joining the stream live today, as well as everybody watching it on catch up. So we're going to continue with these slightly more condensed live shows, especially focusing on a Monday. So we're going to try and get this ripped out in around about 30 minutes, right? And the focus today is going to be on Bitcoin. All right. So some big hellos in the chat from this morning. Who do we have in? Geo in for the win this morning as well. Zenka, brilliant to see you back on here, mate. Erica as well. Lovely Erica. Nit as well in whack, my friend. Hopefully everything is all right with you guys, as well as the other listeners and watchers that we have coming in from YouTube, Twitter, Instagram, all across the marvelous social media space. So starting with Bitcoin, I just wanted to kind of give you guys my higher time frame thoughts first of all. So while we do that, let's just pop these off for a second. Create a group. We'll just put that on for today. And let's kind of get our focus here first of all on the weekly time frame. All right. So weekly has been really, really nice and clear in terms of a read, and we'll get rid of these session breaks as well. There we go. Right. So one thing I really, really like about last week's close is the fact that we managed to close above 69K. Why has that been important? Well, that was the all-time high that we set back here in November 2021. Trade to prosper. Hello, mate. And for me, that's acted as a significant level. Why? Obviously, from a liquidity perspective, we can tell why these were, attacked in the same way as when we took out the previous all-time high here. Came above it, deviated, closed below, and then obviously we saw that sell-off. Now, what I really liked about this and the difference from what we saw here last time, obviously they're not exactly the same, but when we took this all-time high last time, we had this corrective move. The expectation was for this bullish fair value gap here to support price and send it higher, okay? Now, we can see that didn't happen. When we closed below it, violating it, we continue to search for liquidity lower down. So with this one, it was a really, really encouraging sign. When price rejected here, we got this deviation in the same form. We got the corrected move lower, which is always healthy and is good. The markets like to be efficient. So these gaps, these inefficiencies like to be rebalanced. So price corrected down into here. We got that nice bullish reaction, big bullish candle. And then we started to progress with the bullish trend. Remembering we're still setting higher highs and higher lows here, okay? Now, we had a couple of weeks here, this week and this week, all right, week commencing the 20th and then the 27th, where we failed to close back above 69K. Now, for me, this really is the kind of level that was capping the market. Yes, we've got this level above it, but we deviated here, closed below, and ultimately sold off. So now last week we closed above. Then what we want to see this week, and we started to see, is some strength, right? Because where we've swept not just the prior week's high, but the prior week's high here as well, which was also the last weekly swing high, these are really key areas of liquidity, right? The market in flux is typically doing one of two things, right? It's looking to attack liquidity above old highs or below old lows, yeah? Or it's looking to rebalance a fair value gap and inefficiency. Typically, we see price move from external liquidity, as we've seen when we took this old high. That could also be an old low. From external liquidity, price then most of the time moves to internal liquidity. Yeah. And then even though this isn't technically accurate, you think of that in terms of the buyers stepping in. Are there still enough bids? Is there still enough buy interest in and around this level to push the market higher? If there's not, then we see weakness in these areas. When we see weakness in the areas, we get inversions. When we get inversions, I'll just show you an example down here, right, or a couple of examples. Yeah, when we get these inversions, these act as really good support resistance flip areas, right? This one especially because it's also a balanced price range, meaning that we have a bearish gap close through with a bullish gap. We expect this to offer really, really strong support. Lo and behold, what happens, we see when price engages with this, and also in doing so by its nature engaging with this bullish gap, that then allows price to continue. Now, what we see here is a bullish gap, and what we expect this to do is support price, okay? So we can see didn't invert here. Now, we're then looking when that does happen. We can see we have an example here of an inversion as well, and price seeking liquidity lower. But we can see with this example right here, okay, with this inversion. Now, quite often you see price work its way through these relatively easily, right? An initial rejection here and then an immediate move through. You know, we had an initial rejection here, a slightly higher rejection here, which swept that high, and then price kind of carved through it. 1, 2, 3, 4 candles straight through it. Now, if these areas aren't going to offer support, then we expect them to offer resistance. So when we saw this strong close through here, a good strong reaction here, price struggling to get above 69k, but then does ultimately close above it last week. This is now what I'm looking to the charts and saying, okay, we want to see this level hold. So breaking that down in a more granular way, what does that mean? Well, what we've got on the chart here, and let me just get rid of the weekly just for a second, but just before I do, you can see this 69k level here, right? Look, support, close below, resistance, 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 strong close above. Now we can see this wick below the 69k level. This is the level that we want to see hold here. But do remember, on a daily scale, yeah, that this could very, very easily wick all the way down into this to take out this prior swing low, yeah, convince people to start getting bearish, have a reaction within this area here, and then push higher. Now, I would want to see a close below this, yeah, and then I think we're targeting these. However, at the moment, what we can see, and let me just get rid of this for a second, as well as our weekly data. What's of most interest to me here at the moment is this fair value gap that's above us. Because although we can take intraday long positions here, right, there's no problem with that. The issue that I have with this is technically we're favoring bearish setups when we're delivering from a bearish fair value gap. All right, Yargo, hello mate. So that's why I just want to be a little bit cautious here. Now, a daily close above this, and I think, we absolutely rip from here and start making a move on this high here, and then this previous one here at 72,607. While we're still below this, it's telling me that price probably wants to seek liquidity a little bit lower. All right, so we've got the swing low down here on a daily scale of 68,555, 52, obviously here on Femex. And then we can see the liquidity targets we have low. We've got this swing low, this one, and this one here. So you can see how liquidity to the downside is still very appealing. Now, we had these relative equal highs here that were swept. And then we've seen that nice corrective move down. So basically on a daily scale, we close above this, we invert this fair value gap, and then I think it's absolutely go time. So how do we break that down even more so when we look at the 4 hour? Let me just get rid of the session breaks here for you. Right, now there's a few extra bits and pieces here on the 4 hour. So we were looking previously at these equal lows, right? They got swept. We saw that nice bullish reaction. Now, the area I really wanted to see hold here was this. This black line for me was the order block that was set here, these two down close candles. Price closed above it here. It gave us the intraday bias over the weekend, to long into this high here. And now that high is what's capping the market at 69,738. And why is that capping the market? Well, quite simply, price is delivering from a daily fair value gap here that we can see. Price is delivering from a larger 4 hour fair value gap that we can see here as well. So at the moment, we've got a lot of bearish pressure stacked overhead. So the idea was that we really want to see price kind of correct a little bit further up. This Fibonacci here that you can see the 0.5 on, which is set at 70,254, is the 50% of this recent sell-off, okay? So whenever we see an impulse move like this, we look for a 50% retracement. We don't always get it, obviously. It doesn't have to. But it gives us the idea on where the draw could be. So if we combine those factors and we say, okay, whether price is going to, be able to break structure here and get back into a bullish formation or not on the 4 hour, what we can assume is that this 4 hour fair value gap, along with this daily fair value gap, is what's drawing price higher. Now, looking at price back within this region and back within this realm, is definitely a sign of weakness from here. But there's not really lots to go on in terms of granularity. So this, we have to favor this as the rejection at the moment, which aligns with our bearish bias. But at the same time, we do still need to keep our eye on equity markets. We've obviously had a lot of news-driven markets recently in terms of red folder news, which I'll cover at the end of the show as well. But just looking at these as a snapshot at the moment, We can see that we've got equity markets lower today, and we can see that we've got a DXY that is looking very, very strong. That's the dollar index. Now, we're using this as kind of a proxy counter confluence to risk assets like Bitcoin and equity markets. So when we look at equity markets, typically if you're seeing a strong dollar, you'll often see equity markets in the red. Now, why is that relevant to crypto? Well, because especially when we look at the NASDAQ and the S&P 500, they're risk baskets of stocks, but also very heavily focused towards technology, with the NASDAQ being the most focused towards technology stocks. Now, obviously, we've seen a lot of prosperity in that in recent times, the strength of NVIDIA and the earnings that came out. But if we look at equity markets at the moment, we can see that we've had a lot of upwards movement, all right? So if equity markets are looking to cool off, and I think that's very natural, again, we look at the inefficiencies in this move up, even if we look at the most recent move, which is this, right? We just came close to that 50%, but often price does like to take that retracement. So that's just for us to factor in. Again, we never want to use that. We never want to give too much weight to that, but we always want to be aware of it, okay? Because typically if things are good for risk markets, then things are good for Bitcoin. And if things are good for Bitcoin, as we all know, then things are typically good for crypto in general. So where does that leave us? Well, at the moment, I'm definitely favoring intraday plays, in terms of swing positions from here, I think it's a little bit tricky. Bast caught the beautiful short, over the previous week, and that from here, just again, purely because understanding the levels that we're at, we're not seeing kind of strong reactions up here. As soon as we start to show weakness, chances are liquidity has been grabbed from that side, and the smart bet is to trade this lower and look for liquidity lower down. So we can, in instances like this, look to move to a lower time frame. I then like to kind of look at the hourly, but also obviously we can go down to the 15-minute. Now, this order block here, obviously you want to see price get back above this pretty quickly. We're still down within its range because it makes up all of these down close candles here. But the fact that we've revisited it and we've really purged in quite deep isn't a great sign, in my opinion. However, what we can see here, and we've just done during London, is that we have swept these equal lows, which is a really, really good engineered liquidity pool. We can see we've had far more than a 50% retracement from this price leg as well. So we would want to see price, start to at least change its state of delivery here. What would that look like? Well, that would be a close above these, all right? So you would look at price coming down into here. You want these down close candles, all right? Sorry, it closed above this now, actually. Once this sets. So we need to see this set first. So we've got 43 minutes. Once we have this down close candle here, you want to see the up close candle close above it. If we start closing back below these up close candles here, we would confirm them as a bearish order block, and the chances are that price is then looking to seek liquidity lower down. We have one more thing on this time frame, which is a very, very skinny fair value gap here. All right. So again, if we do see a positive reaction here and we close above this, there's not really much stopping this until we start getting into these highs up here, which will be offering a really, really good liquidity target. So I'm not going to really focus on getting any more granular than that at the moment. I think hopefully these things should stand out pretty clear, but we just need to see how price action plays out. We also need to remember that we're in a real kind of like non-news day today in terms of red folder news. Monday, June the 10th, there's no red folder news affecting the markets, be that FX, equities. Obviously, we have a big look at the moment towards Wednesday, which is FOMC, and we all know the volatility that can bring. So Wednesday, we have a huge news day. We've got core CPI month on month in the US, CPI month on month, CPI year on year, federal funds rate, FOMC economic projections, FOMC statement, and the FOMC press conference. Excuse me. So you can see that Wednesday is going to be a huge news day, right? So basically, if the US come out, Europe have set the tone last week in cutting rates. Britain were just a bit too gutless to do it, but it doesn't surprise me under that Muppet Bailey. But the markets are betting heavily that the US will keep rates the same as they are, right? That they won't follow the ECB and they're not going to cut. If they do cut rates, then that would be a huge red flag to a bull for the bull market, right? I think that could really kind of set things off, because just a sign that things are starting to ease, and that normally injects a lot of positivity and liquid capital into risk markets. So that's where we are with the thinking on that at the moment. So I want to slip over and take a quick look at Ethereum. So as we've been covering, let me just get rid of that, be on a lower time frame. This is the corrective move deeper into this gap. Now, we saw this really, really nice expansion in here. Yeah, so even if we take the recent price leg, again, our expectation is for price to come down towards this 50% area. Now, obviously, this huge pump here from ETH, this weekly candle was absolutely immense. It was huge. ETH had been lagging Bitcoin. You know, we got that real injection of positivity aligned with what happened with NVIDIA as well. You know, and this thing really, really took off. Now, it's very normal after seeing a big expansion like this to have a period of consolidation. In fact, looking at the previous extension above here, yeah, we can see this 50% line. What did price do? Price came down into this. Let me just get rid of this for a second to keep this clean for you. Price came down into the lower 50%, found perfect support within this bullish fair value gap, and that's what led to the move higher. So from where we are at the moment, if we apply those same principles here, we can see that price could have a little bit more to kind of go yet. Now, obviously, we can see these things run really, really hot. So on the lower time frames, we will put parameters in place that if they are broken to a bullish sense, then we would still look for long positions again, because ultimately, you know, we are still very much, as we can see here, in a strong upwards trend. So I'm still favoring the fact that we moved towards last week's low at the moment, especially with the current kind of state, the strength in the dollar and the weakness in equity markets. But, you know, it's Monday, US open, the US markets are yet to open, so that will really kind of tell us a lot more. Now, moving on to a daily, we can see that we have a real kind of almost carbon copy of what we're looking at on Bitcoin. So we've got this daily fair value gap. So for me, if I'm in and around looking at this, until we get back above this, I'm still favoring shorts here. We've got clear liquidity target resting down here. And I really like this daily intermediate term low here as well, which is just a low that resides within a fair value gap. Slightly more than that if you look at the technical teachings of ICT, for example. But I really, really like these lows and highs that are within fair value gaps. Often, you know, they're really, really good liquidity pools. So keeping that in mind, we have to be favoring shorts here until we get back above this on a daily scale. So that is really, really clean and clear. Now, on the 4 hour, breaking that down even more granularly, as we said, if we're looking at this as kind of like the move down, we can see that we've had part of that corrective move. All right, back up. Now, if we were looking at that for the actual expansion leg, so that's high to high, it would be that. If we were looking at it more as a dealing range, then we would take it from the top of the price leg, which took liquidities from the high and from the low. If we're looking at the latter, we can see we didn't quite get back up into this 50%. So we could be looking for a little bit of resurgence here. I would see that as certainly a temporary sign of strength here from ETH. We've come in, obviously swept some lows here, generated some liquidity, and now price is moving higher. So once again, we can see we're met with this fair value gap here. And on a 4 hour basis, I think this will really give me an indication here. If price closes above this, then I think we're going to make a deeper move up into this. Now, could that be the resurgence, you know, of the bullish trend on here? Absolutely. We'd certainly have a shift in market structure because we would have, you know, taken out this high here. Because look, we've come down, we've set a low, we've got a higher high, but now we've got a lower low again, right? So we would need to technically set a higher high and a higher low to get back in bullish structure. But, you know, get back above this fair value gap here and invert it. I think we're going to take that high there and certainly look to fill some of this 4 hour inefficiency up here as well. So we've got about 8 minutes left in the show. Did anybody, I'll just take a quick look at the DXY. I'm also going to take a look at the equity markets, but did anybody have a ticker that they particularly wanted us to take a look at? We can probably fit in, maybe squeeze in one or two before the end of the show. So looking here at the NASDAQ today, expectations are that, you know, again, we've taken external liquidity here. We've had this huge run up. What I'm always asking myself here is, if I'm thinking like an institutional investor, BNB, perfect. All right, Erica for the win. We'll absolutely take a look at that. If I'm thinking like an institutional investor here, am I thinking that this is a good buy here? Magic. All right, guys. So we'll fix that in BNB and AVAX. Make a note of that. There we go. We'll cover those two. And remember, guys, going to be live again on Wednesday with our Alt Request Wednesday, so we can rip through a lot of charts then if you've got any others you want us to take a look at. But in terms of how the NASDAQ can affect these markets, this should provide a strong area of support. However, we always want to be thinking when price is kind of, setting new all-time highs, then you pretty much, you're approaching that with the methodology of we long this until it breaks, okay? And we can see here, big, beautiful fair value gap. Price had this huge displacement above here, set this for us on a daily scale as well. We can see between there and there, slightly bigger than the 4-hour one. Price has dipped into this. So if this shows me enough signs of strength, I'm happily going to be jumping back on with the long positions, right? Because again, look, when you're setting new all-time highs, then the thing is bullish until proven otherwise. So let's start by taking a look at BNB, shall we? Okay, so how are we doing with this? So again, you see the build up of liquidity across here. Price comes up, purges these two, gets back underneath. Then when we get back above, just can't resist coming up for these targets higher up. All, of course, at the same time being delivered from this nice bullish fair value gap. So where does that leave us at the moment? Well, on a daily scale, and just because the daily just screams out so clear here to me, this really today is all about holding this, because you would want to see a decent reaction at this low, because again, we've got an intermediate term low here. We've got a low that's formed within a fair value gap. This should be a really good liquidity pool, meaning that if this is, think of it as a manipulation, as a deliberate move lower by, large players within the market and very smart, very advanced players, then this, if there's enough liquidity down there to fill their bids, then this should be a point that we should see a reversal. Now, the fact that there's a big bodied candle here, big bearish body candle, shows me that there seems to be quite a lot of momentum pushing through this. However, what I think doesn't matter. It's what the chart tells us. It's our systems. It's what we can overlay. It's what we can prove. It's what we can prove with the data. And the data here is telling me I need to wait for this to close. Yeah. Because by waiting for this to close, then if we hold this, I think we could still recover from here. If we close below it, then I think we're definitely visiting this gap. But I'd be even more interested in this low down here and this low here. What I would say in terms of looking at this to the downside is that we've got these beautiful liquidity clusters building here, right? So even if we just start from this one through to here, and you'll typically see these on my chart. So I've always called them kind of clusters, or liquidity clusters, either flat highs or slopes, highs and lows like these, untapped, 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 untapped. ICT traders will know them as low resistance liquidity. And to give you a good example of what we had above the highs here, right, when all of that started to build up in the same way, excuse me, see all this liquidity building, untapped high, untapped high. Why are these areas important? Because that's where the stop losses are, right? You got to think of it like this. You got to be thinking, okay, where are people going to put their stop loss? If they're short players here, stop loss is going to go above there. Then they're going to short with the stop below there, and then here, right? So what you get this beautiful collection of pre-made liquidity. And think of it like this. If you're a massive institutional player, right, and you want to, you're looking to invest tens, sometimes hundreds of millions. You can't just buy everything in one go. And you certainly, have to buy and sell in the right places. Otherwise, there's not enough people on the other side of your bet, right? For every bid, you need an ask, and vice versa. So when you see these big liquidity pools stacking, then they make amazing places to attack, because when you trigger these stop losses, they turn into market buy orders. So if you've got a load of buy orders up here and you want the market to go the other way, that's where you want to park your truckload of cash, because basically they're pre-made orders ready for you to just throw as much as you want into. Think of them as like a money well. Yeah, you can fill huge orders and then you can send the market in the opposite direction. So maybe this is kind of something we've seen here. We saw a little initial sweep here. But now if we look at that high and we kind of draw that across to here, and we say, okay, now price has kind of taken this out. Wouldn't it be a really clever move now that everyone's starting to get really super bullish here to throw them all off, because now what people are doing is people are doing this. Yeah. So people are going, okay, I'm really bullish on here. So maybe I've got a position open here and I think we're going to price discovery, right? Nothing wrong with that. Or there's people down here, for example, that have got the position open that are now nicely in profit, but are letting it run. When these positions start getting triggered, what they start to do is create all these market sell orders under here that would then allow people to do this, to get everyone super bullish here, only for them all to be wiped out. Then they get bearish down here, where you take all that liquidity and the market can go up again. You know, really, really study markets, right? And the way that they move. You know, they are savage beasts, but they do have a consistency to them. And that's typically that they are run and controlled by liquidity. So where are we at the moment? On a daily scale, I want to see this hold. If this holds, consider longs. If this fails to hold, we show weakness, then I think we're going to start to make a move down here. But I really do think that we could see a move sharply into these areas before a quick recovery, all right? Now, taking this down to the 4 hour, overlaying this thought process, in 30 minutes, this closes. And this is about as clean as it gets, all right? If it closes like this, and bearing in mind this is our 4 hour FVG, then quite simply, the reason we need this candle to close as well is because, you know, in the next 30 minutes, this candle could completely close back up here, invalidating this. But on the assumption that this closes like this, then we simply have two plays available to us. Yeah. One is that we close through this, we look for a pullback, and then we're back into long territory. Or we move up, we look for moves towards the 50% of that down there, but it doesn't have to be, right? And then we're favoring shorts down to here whilst this holds. Yeah, we would need to see a 4 hour close above this to really be thinking that price is going to be getting more bullish. But again, if we look at liquidity here, what have we done? Filled this inefficiency, filled this inefficiency. Where are we delivering from? That's always a super important question. We are delivering from a bullish gap. I'm just going to do this in green so it stands out a bit more. So we're delivering from a bullish gap. We've got a bearish gap forming, which is going to be our draw on liquidity higher, all right? If this is indeed the low from here, and then we take it up to the price leg down, so this high here, then we can see that we could expect an intraday play for a long correction back towards around about 661.67, all right? Close below this in the next 30 minutes, and then I would be aggressively targeting shorts into this low, which is an intermediate term low, which is down at 620.39. All right, guys, and that is just beautifully clean and clear for me. Obviously, BNB, one of our big movers from last week. So let's close up on a little bit of AVAX, shall we? What have I done there? Yes. Here we go. So AVAX, let's zoom ourselves right out here, see if the weekly kind of tells us anything. That lovely level at 50 flat, that was always going to be a pain in the backside, that level. And once again, I don't really care if I sound like a broken record player or not. Hopefully it makes sense when you listen to it enough. But look, this inversion here was the perfect indication the price had lost that momentum. And then we see this bearish gap here. Price comes down, takes out some lows, now rejecting at this fair value gap. So as we look at this, let me just clear these up. As we look at this, we can see whilst we're rejecting here on a weekly scale, the chances are we're looking for liquidity lower, all right? This was the swing low, and we've swept that now, right? So again, if we're going to find some liquidity, that's going to be a good place for it. Slightly below that is this one as well, weekly swing low, which is at 30.549. So moving to a daily, trade to prosper, took a with BNB, I took a short at the top because I had a long on the, break out the straight, hedge both sides. Nice. Yeah, good advice. I mean, it takes a lot of skill to hedge correctly for sure. But I think, once you understand that and you understand the spreads and the returns, the risk, once you've got a dialed in risk profile like that, I think, you see that a lot with the big trading desks, and right. So hedging your positions. So for anybody that's maybe not kind of familiar with that, what Trade to Prosper is talking about here is that you're looking at correlated assets here. So you had a long breakout on there as well. We obviously had the strength in ETH. BNB was very much aligned with that, and then hedged the position by going short as well. So when the winner got into a position of loss, the money's being covered by the short. And the idea then is you have certain parameters in place that when you break certain levels, or the market in this case shows a certain level of weakness, you can cut that long at a loss, yeah, but a controlled loss, and you've covered those losses with the runner that you've got on your short trade. Yeah, I think that's clever. I think it's a good idea to do it, especially when you get into key levels, all-time highs, bits and pieces like that. So that would be, for example, saying, okay, we've got a long on here because we can see the breakout, right? Then when the breakout fails and when it gets below certain levels, you clumb back below this, for example, you short this level, and then you say to yourself, right, okay, well, I think we're certainly going to these lows. What you've done is you've counteracted this. When this one fails, you cut the loser, you keep the runner on, and then you cover yourself, at least sometimes get yourself into a little bit of profit as well. So what we can see here on a daily scale is we've had that nice reaction now. Okay, we see that long downside wick. However, price, you can see, then started to struggle again, right? So it's kind of grinding down. Now, don't get me wrong, you know, this was Saturday and we've had Sunday as well, so less volume and certainly volatility in the market. But once again, I think we've got a really kind of clear draw on our hands here, which is the daily fair value gap. Again, if we're looking at the principle that price has taken external liquidity, right, and the fact that it's run and swept this low, then price could well be reaching, and more likely than not will be reaching for a fair value gap like this one here to rebalance, before then continuing with what the main trend is, which we can see here is bearish. So we could look for intradays to draw up into this position as long as we get our setups before selling off down here. Now, obviously that doesn't have to happen. And if it doesn't, then what we want to do is put a set of parameters in here. If we close above this, by the way, then this high, and this high, once again, you can start to see some liquidity stacking over here, right? This engineering of liquidity, whenever you see kind of like these relative equal lows as well, and they don't have to be perfect, right? But those are close enough for me. Flat lows or sloped clusters of lows like this or highs are really good liquidity pools. So quite simply, reject here, we're targeting these equal lows. Close above this, we're targeting these. On an intraday basis, we could take reduced position size trades into this, yeah, and then we would obviously look to cut them pretty early, or certainly cover ourselves pretty early. Either, you know, moving our stop losses up, hedging the position, etc., because we don't know what's going to happen at that point. Show any more or sustained weakness here, and I think we make, you know, a pretty swift move down to this. So on a 4-hour scale, we can see, you know, price doing its thing as we've discussed. The bearish fair value gaps are keeping price suppressed. Just do this one in red so it stands out a bit more for you guys. So they're keeping price repressed at the moment. We've got this swing low immediately below. As long as we hold below this, I think we target this, this, and this. All right. So that's the immediate swing low here. But, you know, price is drawing into this now. We've seen price come down and take these kind of lower time frame lows here, right? Which again, when we draw our little line up here, if we were to look at this on, say, like a 15-minute, right, you would see how that correlates to the idea that price loves to kind of run these stacked liquidities, yeah? So look at all of these beautiful lows down here, untapped, 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 untapped. Now we've had a sharp, aggressive move back into these levels. And then here we can see in London what happens. We wipe out that liquidity, we get our inversion in here, and price is now looking to move up. So I don't want to really focus on those kind of time frames, those kind of intraday ones. It's completely up to you how you trade those. You know, for me, I would just be looking for these clean. If I was looking for a long here, I'd want to see a low swept. I then want to see the high that swept that low, yeah, closed above, and then you look for price to move down into, say, a fair value gap, yeah, that would be created there, which would be your bullish gap. Or, for example, you could see price move into like a breaker block, all right, the last up close candle that you would have in the price leg down, which is the manipulation leg, all right, and then I typically draw them in orange. These are the kind of key areas that you can then, you know, look to take your intraday long positions. So I like kind of confirmation setups like that rather than leaving, you know, orders on certain levels, but each to their own. So basically, whilst we're under this, I think we're favoring moving down lower to take out liquidity below. However, we need to consider as well that we've had this quite sharp move down here. And if we look at this and, you know, apply our rule of 50% here, right, that's to the leg. We've still not kind of really come back up and troubled this yet. And that does align with the fair value gap, which is why we're saying to ourselves, maybe we do kind of see some kind of stronger reaction here to go slightly more granular. Right, we can see here that we've got these moves down. But what I quite like about this here on the hourly is if we draw this across. Hey, Zach. How's my little buddy doing? Whack and Zach in the house. very young, aspiring trader that we got in our midst. I think the market makers and hedge funds are going to be absolutely trembling when Zach gets to age. Certainly learning as young as this. I wish I'd started this young. Currently finding VAL fixed volume tool resistance. Okay, interesting. Yeah, so I mean, again, not I don't really use a lot of indicators these days. Certainly have done throughout my career. But for me, the cleanliness of this is quite simply, if this inversion here is going to hold, we can look for intraday long positions here to fill these inefficiencies as a minimum. Because I do think if we're going to show strength here, then price is going to look to run, a little bit higher. However, close below this on an hourly scale, and I think that's a sure indication that we come and start taking out some of those lows. Raphael, my man, literally, I'm just about to sign off, my friend, but it is wonderful to see you on here. Look, it is on recording, guys. If you do want to watch any of this, if you have got any questions, please do let me know. Please do check out the description. Come and join us over at Femex. We're doing some amazing things over there on Femex Pulse. It's completely free for you to join. Amazing exchange to trade on. And you get rewarded just for interacting and engaging. Yeah, we've got our own little community over there. We share setups and alpha every day that's just completely unique to that. Also, my absolute baby, which is the Bird Nest. If you guys would like to come and join us over there, you can find some details down in the description, as well as loads of goodies and bits and pieces for exchanges if you would like to. If you can, smash the like button if you have enjoyed the stream, then that certainly does help us out with the old YouTube algorithm. And apart from that, I want to wish you all a very good and prosperous week ahead. I do just want to finish by sharing this with you very quickly, which is our economic calendar. So please do be aware, right? These red folder news events. This is on Forex Factory. You can also use something like Baby Pips. They're all completely free. You know what? Let me just copy their thing. We've got no association with them. Nothing happens from the link. It's just a really good way to keep yourself updated. And you see this little bit at the top right? If you go on here and select red folder news only, it tells you the key events. And what we can see here is just how stacked out Wednesday is, right? With news. This can send the market here, there, and everywhere, right? Especially if you're looking for anything more than an intraday play, often a really good idea to watch the dust settle after you have the initial moves based after that news. All right. Thank you so much, guys. Always a pleasure here from you. Thank you, Trade to Prosper. Thank you for your input today. Really interesting learning from that. Much appreciated for everybody joining in today. Have a fantastic week ahead. We're going to be live again on Wednesday at midday London time, which is 1100 UTC. And we'll look to jump into our Alt Request Wednesday. All right. Have a fantastic week ahead, everyone.